Hey guys, welcome to another Damilola Forex Academy video. In this video, I'm going to be explaining what chart structures are, how you can be able to use them for massive gains in the market, and how to identify chart structures properly. I'm going to take you through a journey of explaining what fractals are and how you can be able to use this general knowledge of chart structures to become a profitable trader and to make massive gains in the Forex market. So grab your pen, grab your book, guys, and every single thing I'm going to be talking about with chart structures, I want you to pay rapt attention to it. And I assure you, you are going to become a profitable trader. Let's go. Before we start the video, I want to introduce you guys to my bootcamp that is coming up on the 15th of December to the 17th of December. It's going to be a very important bootcamp for anyone willing to become a successful trader, because I'm going to be introducing you all to very important and vital parts of trading, which cuts across in the introduction to improving multi-time frame analysis, to finding key value zones in the market, to introduction to reversal drivers, to importance of trading systems, to trade journaling. And I'm going to be taking you all by the hand and teaching you in the easiest terms so that every single person that attends will become a profitable trader. It's a very affordable bootcamp that I'm charging only $39 on, but I assure you every single attendee is going to become profitable and you are therefore going to become a successful trader. So link in the description if you want to attend, and let's go back to the video. I'll start by explaining what chart structures are. It's important to note that chart structures are the movement of candlesticks. Whenever this candlesticks moves in a sequence, and this sequence are what we call chart structures. These candlesticks just don't move randomly. When a novice comes and looks at the chart, it thinks, these candlesticks are just moving randomly, but that is not true. When candlesticks creates a sequence, and this sequence are what we call structures. Okay, candlesticks moves in a specific sequence, and this sequence are what helps us to be able to know the next direction where price is going to. Okay, because if price is moving on a particular sequence, for example, if price is moving on higher highs and higher lows, we know clearly that what the market is bullish, and we could be seeing a next bullish movement. If market is moving on lower highs and lower lows, we know that, okay, the market is bearish, and we could be seeing the next bearish movement. So chart structures are very important, and in the past I called chart structures the skeletal system of prices. Okay, this is because chart structures is the foundation of price action. You cannot trade price action correctly without having the proper knowledge of chart structures. Okay, and chart structures, like I said, are the movement of prices. Whenever you open your charts, no matter what time frame, from the 1 minute time frame to the monthly time frame, chart structures are in every single time frame. So far the market moves in candlesticks, you are going to see chart structures. Okay, so that is what chart structures are. So the next thing I'm going to be talking about is what the types of chart structures. Okay, so for the type of chart structures, it's important to note that we have the bullish and the bearish chart structure. Okay, let me specify it out here. We have the bullish structure and we have the bearish structure. Okay, so what does the bullish structure comprises of? What makes up a bullish structure? Okay, bullish structure is made up of higher highs and higher lows. This is very important to note. And a bearish structure is made up of lower highs and lower lows. Okay, lower highs and lower lows. It's important to note that when market keeps making consecutive higher highs and higher lows, like I said, it is a what? It's a bullish structure. And when market keeps making consecutive lower highs and lower lows, it is a bearish structure. Okay, one of the first things you are taught when you come into trading is that what the market moves in waves. Okay, the market does not just keep moving like this. Instead, the market moves in waves. Okay, that is after every push phase, there must be an exhaustion. After every push, there must be an exhaustion. After every push, there must be an exhaustion. Now, this push and exhaustion movements creates patterns. It creates patterns. It creates patterns and creates structures. Okay, so now these structures are what we are now going to check as chart structure traders to see that, okay, this consecutive sequence that market is creating, is it creating higher highs and higher lows, or creating lower highs and lower lows? Okay, with this example I've drawn out right now, we know that what this is an higher high because it's higher than this high, and this high is also an higher high because it is higher than this high. This low is an higher low because it's higher than this low, and this low is also an higher low because it is higher than this low. This is also an higher low because it is higher than this low. Okay, so it's important to note that what we should go ahead to look at what the sequence that market is moving on, and this is going to allow us to know what structure prices is trading at. Okay, so let's go ahead, let's identify that together. For a bullish structure, just like we identified, is going to be what we are going to be seeing prices making consecutive push and exhaustions, consecutive push and exhaustions like this, and higher highs and higher lows. Okay, so let's go ahead, let's write it down. This is the low, clearly, right? This is the high. This is the higher low because it is higher than the previous low. This is the higher high because it's higher than the previous high. This is the higher low again. This is the higher high. This is the higher low, and this is the higher high. Okay, so clearly we know that what market is moving on consecutive higher highs and higher lows. Okay, this lets us know that what we are on a bullish structure, or we are on a bullish trend. And in this note, we know that what if we are taking any buy opportunity, we are in the direction of trend. Okay, and we know that what any sell opportunity is going to be a retracement, and any sell opportunity, we have to be careful. We have to, if we are selling, for example, we have to watch out for what strong support or resistance areas, or watch out for the Fibonacci of the low of the high of where we are selling. So it's very important that what when you are trading retracements, you watch out, you look left, watch out for strong areas of support and resistances, or watch out for Fibonacci areas. Okay, so this is what a bullish structure is. I'm still going to go into detail of how to trade a bullish and a bearish structure in the direction of trend, and if you are trading a retracement. Okay, so this is a bearish structure here. Okay, so now with the bearish structure here, we can see an high, right? Then this is a low. Then this is a lower high. This is a lower low. This is a lower high. And this is a lower low. Okay, so now clearly we know that what this is a lower low because it is lower than the previous, and this is also a lower low because it is lower than the previous. Clearly we know that what this is a lower high because it is lower than the previous high, and this is also a lower high because it is lower than the previous high. So this has let us know that what price is clearly on consecutive lower highs and lower lows, letting us know that what if we are selling, we're in the direction of the trend, and any buy is a retracement. And if we are buying for a retracement, we should watch out for what strong support areas like this, and we should also watch out for the Fibonacci 61.8 zone, because that can send prices back to make consecutive lower highs and lower lows, since that is the direction of the trend. Okay, so this is the bullish structure, this is the bearish structure. Okay, so the next thing I'm going to be talking about is fractals in chart structure. Okay, let's go ahead and write that out. Fractals in chart structure. Okay, so it's important to note that when market moves in different fractals, right? And when these chart structures move, they move sometimes in big fractals, sometimes in small fractals, sometimes in smaller fractals. But it's important that what we are able to separate these fractals. It's important we know when we are trading the big fractals. It's also important to know when we are trading the small fractals. Okay, so for example, let me draw it out on the next page. If we see prices start on big fractals like this, push, exhaustion, push, exhaustion, then prices starts moving on small fractals like this. And if we see a break of structure of this fractal, now if we see a break of structure of this fractal, remember that the structure that was broken is the small fractal. The structure that was broken is the small fractal, and the overall fractal from the low to the high here is not broken. The only structure that was broken is the structure from this low here to this high. That is where it was broken here. So it's important that what we are able to separate them. This is because what is separation of fractals, it allows us to be able to pick our exits properly. It even allows us to be able to understand what we are doing in the charts, and of course helps our entries too. So now clearly price is making higher highs and higher lows. Now a sell here after a break of structure, a sell here with your stop loss above. Now if it is a retracement, okay, I'm still going to teach you how we trade if it is a retracement or if we're in the direction of trend. Okay, so if it is a retracement, the maximum we trade to is the 61.8 of the broken fractal. Now the fractal that was broken now is between this low to this high. So now I'm going to bring my Fibonacci between the low to this high and take profit at maximum 61.8 of the broken fractal. Or I will look for a strong area of support and resistance. For example, if this particular area of support and resistance looks very strong, I can see a resistance here, I will decide to exit my trade here, even if it is above 61.8, even if price has not gone to 61.8, if it's around 50.0 or even 38.2, and if it's a strong area of support or resistance, I will exit my trade because it is a retracement. And if I'm trading against the direction of the trend, I should be careful because prices can come here and take off like this to continue higher highs and higher lows. And at the end of the day, all of these small fractals is just going to be another, in the big fractals, it's just going to be another push, and all of this were the exhaustion and push to continue the bullish structure. Okay, but if you don't have the proper knowledge of fractal, now when you see a break of structure here, you'll be like, oh, all the structure is broken, all the bullish structures are broken. But it's not true. The only structure that was broken is the structure of this fractal from the low to the high. And if you are selling and you want to take profit at 61.8, if it's a retracement, you do what? You bring the Fibonacci from the low, from this low to this high, not from this low to this high, because that would be wrong. So you put your Fibonacci from the broken fractal, the low of the broken fractal to the high of the broken fractal. And if it's a retracement, sell to 61.8. Like I said, at the end of the day, markets could just be making, all of this will now be what? A push. All of this will now be a push. Then all of this was just a retracement for an exhaustion for market to continue making its push of consecutive higher highs and higher lows. Okay, so it's important that what we understand fractals. We know the fractal that we are trading. And it is the same for the bullish structure. It is the same for the bearish structure. You need to be able to understand the fractals that you are trading. Now, if the overall direction of trend is bearish and you want to sell to 100.0 now you are not going to sell to, and you see a break of structure here. Now the 100.0 you are going to sell to is this, because this is the 100.0 of the broken fractal. If you bring your Fibonacci from the low to the high, this is the 100.0 of the broken fractal. Okay, and using this 100.0 will be wrong because this fractal is not yet broken. Okay, by the time if prices comes and breaks this fractal here now, right now price has broken the big fractal, from the low. Now price has broken the structure from the low right here, price has broken the structure from this low to this high. Okay, so this is how it works. Okay, so now if prices breaks the structure from the low to the high, now you can sell here. If you're in the direction of trend, you can sell to 100.0. But if it's a retracement, you have to watch out for strong support or resistance areas, or also bring your Fibonacci out and max take profit at 61.8. Okay, so it's very important that I understand fractals. Okay, let me just explain it one more time just for clarity. For example, if this is a clear bullish structure here and you see a break like this, now they are in the same fractals. You are going to bring out what your low from here and what bring out your high from here. Now, if you're in the direction of trend, this is your TP at 100.0 where the old structure started. That is what, if all of this bullish push at the end of the day was just a retracement and market broke the retracement structure, you know that what fell back down to where the structure started to 100.0 since you're in for the direction of trend. But if all of this bullish movement is the direction of trend, that is price is bullish, and you see a break of structure, if you sell here, the max is 61.8. Okay, so in summary, you should know the fractal that has been broken. Okay, I'm going to explain using the bearish structure briefly. Okay, for example, this is what push, exhaustion, push, exhaustion. And you see prices start moving on smaller fractals like this, and you see a break of structure. Now, the structure that has been broken, this is a good buy opportunity, yes, with your stop loss at the low, but the structure that has been broken is the structure from the low, from that high to this low here, not the overall structure. Okay, so if you are buying and it is a retracement, you bring your Fibonacci out from this low to the high here and buy to the 61.8. At the end of the day, it could just be something like, oh, all of this eventually will now be the push. Prices only went to 61.8 for a retracement, only for it to continue the bearish movement. Okay, so, and if it is in the direction of trend, the max you can take profit is 100.0 because this is the direction of trend. If you want to go beyond this, you have to break even and wait for prices to break. Now, by the time prices breaks, then all of this will just be a push. What prices just did is this: push, action, push, break. So this now provides you an opportunity for another buy again with your stop loss at the low, another buy with your stop loss at the low. Okay, so this is how to understand fractals. Okay, so like I said, by the time prices breaks this level, this high, now all of the structure from here to here has been broken. Okay, so when prices does that, if you're in the direction of trend, buy to 100. If you are not, bring out your Fibonacci or be wary of strong resistance and support zones if you are not in the direction of trend because you are trading against the trend. Okay, so that is that about fractals. Now, how to trade chart structures. Okay, that'll be our next topic: how to trade chart structures. How to trade chart structures. Okay, so I actually just explained it right now in my explanation of fractals, but I'm going to specify this. I'm going to specify something. Okay, how to trade chart structures. It's important to note that I only trade when there is a break of structure. This is my criteria of entry. There must be a break of structure. Okay, so when there is a break of structure, what else do I wait for? Okay, of course, it's also important to note that what break of structure happens at strong support or resistance levels. Okay, that is where break of structure happens. Okay, so it's important to note that what I always make sure I identify a strong support and resistance area. Okay, so this is important. I make sure that what I identify a strong support and resistance area first and anticipate a break of structure. Remember that what these strong support or resistance areas are not made of concrete, so prices could prices could break those zones, or prices could respect those zones. Okay, so but if I see a break of structure on a strong support and resistance area, this lets me know that okay, there's a probability that this strong support or resistance area is going to hold. And of course, there are also times that what a break of structure doesn't happen and prices respect that area. But my only criteria for entry is what I must see a clear break of structure. Okay, this is very important. And whatever structure that is broken, just like I told you, whatever structure that is broken, I take my profit at the 100.0 of that structure if I'm the direction of trend. And if it's a retracement, I take my profit at 61.8 of that structure if it's a retracement. Okay, so how to trade chart structures, break of structure, very important. So like I said, a break of structure happens at a strong support and resistance area. That's why this is bracketed. Okay, so now it's important to note that in the direction of trend, just like I've been explaining, in the direction of trend, take profits at 100.0. This is important. At 100.0 Fibonacci. If you're in the direction of trend, then in a retracing market, take profits at 61.8 or strong areas of support or resistance, or areas of strong supports and resistance. Okay, so these are very important. Okay, so the knowledge of structures lets us know that what if you are in the direction of trend, just like I explained. Let's go back again. If you are in the direction of trend, for example, we see prices making consecutive bullish structures like this. You understand? Probably is making this bullish structure in like the 30 minutes. And in the 30 minutes, we saw a break of the bullish structure. Okay, how do I know if I'm in the overall direction of trend? This takes me back to what our multi-time frame top-down analysis. Remember, we'll do our analysis from the monthly down to as low as the 30 minutes to pick a trade, or sometimes the 1 hour or the 4 hours to pick a trade. Okay, so now if the monthly, weekly, and daily direction of prices correlates with the 1 hour and 30 minutes real-time break of structure that happened, if for example the monthly, weekly, daily are telling me that market is bullish, and on the 30 minutes I see a break of the bullish structure, that lets me know that what I'm only trading a retracement. And if what on the monthly time frame, if on the monthly, weekly, and daily time frame the market is bearish, and on the 30 minutes prices was making a retracement like this of higher highs and higher lows, and I see a break of the higher highs and higher lows, it lets me know that what market is going down to 100.0, that what the direction of trend from the monthly down to the 30 minutes or the 1 hour or the 4 hours, whatever time frame I'm entering the trade from, the bias from the monthly, weekly, and daily, it is incongruent with the bias on my entry time frames. Okay, let me know that okay, this is the direction of trend. Okay, that's okay. On my entry time frame, whatever bullish movement I saw was just a retracement, and since a break of structure has happened, take profit at the 100.0 at the ground level where the old bullish structure started. And if it's a retracement, price is making push exhaustion like this, and if it is a retracement and I see a sell, I know that the max I can sell to, one, this support level. Any strong area of support or resistance can send prices back. One, a strong area of support or resistance. Two is what I'll bring out my Fibonacci from the low to the high and take profit at the 61.8 of the Fibonacci. That is the maximum I can go in a retracing market. Okay, so like I said, how do you know it's a retracing market? If you go to the monthly, weekly, and daily, and those three time frames are giving you a particular direction, and if you go to your 30 minutes time frame and your 30 minutes time frame, or 1 hour or 4 hours, any of those time frames as your entry time frame is giving you another direction, then that means that what you can enter that trade, but it's a retracement and market can reverse at any time. So you have to be careful, look left, and watch out. But if you're in the direction of trend, just go straight to 100.0, because you're in the direction of trend and market will keep going. But if it's a retracing market, that means that whatever real-time entry you are seeing on 30 minutes or on 1 hour is different from the overall structure of prices on the big time frame. Remember that what these big time frames give you an eagle eye. They let you see the markets from an eagle eye, and what this small time frame should just be used to go ahead, chop prices, and have some fun around buying or selling prices. Now, the next thing I'm going to be talking about are the 3 ways I trade prices after a structure breaks. Okay, so I call them my entry types on break of structure. Okay, so I have three ways I trade whenever a break of structure happens. Okay, so which is what? For example, this is the structure, right? For example, this is a bullish structure and there's been a break of structure. Okay, when a break of structure happens, I can sell pinpoints and what take my profit if it is in the direction of trend, take my profit at 100.0. Yeah, that is fine. You know, sell pinpoint here, put my stop loss at the high, and what sell to 100.0 if it is in the direction of trend. Now, another way I trade is what I wait for a retracement to 61.8. Fine, I know clearly that a structure has broken and price is coming here. But in order to get good risk reward, what do? Sometimes I wait for what? A retest to 61.8. That is the 61.8 of the Fibonacci from the high to the low. Knowing fully well that about 80% of the times, whenever there is a break of structure, you can be able to see prices make a retracement to 61.8. Okay, so that is what when there's a break of structure, we see a retracement to 61.8. So now, instead of selling pinpoint here and holding the trade in loss to when it gets to 61.8 and now reverses, instead of that, I can wait and what at 61.8, sell pinpoints, put my stop loss at the high and get a better risk reward to the 100.0 TP if we're in the direction of trend. Also, it's important to note that it's not all the time that prices makes the 61.8 retracement. Okay, so but there's always a foregone alternative. You can enter pinpoints and you can still make your money to the ground, or you can wait for 61.8 retracement. That is, if 61.8 retracement does not happen, then the trade is gone. So there's always a foregone alternative. Okay, so the third way I enter my prices is that what I watch the structure that took prices to retest at 61.8. Okay, because like I told you, no matter what size of structures, prices always moves in structures. Okay, so what do? When prices hit 61.8, let's say this is the 61.8 area, I'll look at the structure that brought price to 61.8. It is clearly going to move in smaller fractals, which is okay. So now I'll now enter with the smaller fractal and sell here and put my stop loss at the high and still sell to this point here. Because remember that what before prices breaks a big fractal is going to start by breaking a small fractal. Okay, so now instead of selling pinpoint at 61.8 here, I'm putting my stop loss here, which of course would be a wider stop loss, and of course my take profit remains the same in the direction of trend. Instead of that, I can watch the structure that brought price to 61.8 is going to move in small fractals. Then what? I always make sure that I only trade obvious structural break. If the structure is not clear, I let it go. It's not compulsory you trade a structure. So far it's not clear, let it go. So I only trade obvious structural break. So I'm going to watch the structures that brought prices up to 61.8 level, and at the break of that structure, I'm going to sell down to the 100.0 level for take profit. This one gives the most risk reward because I can be able to put my stop loss here, I can be able to enter here, put my stop loss above, and watch prices hit TP, giving me a better risk reward. Okay, so these are the three ways I trade. Pinpoint sell on a break of structure, or what? Wait for 61.8 retracement, sell pinpoint at 61.8 and put your stop loss at the high, or watch the structure, the fractal that brought price to 61.8, sell at the break of that fractal and put your stop loss at the high. So these are the three ways. So let's go on to the chart and I'll show you a real life example of how we're able to use all of this knowledge for a multi-time frame breakdown, okay, to make good trades and apply it onto our top-down trading analysis. Let's go. In applying everything I've taught you to a real-time multi-time frame analysis, it's important to note that you have to start from the monthly and you have to chop prices in its structures and its fractals down to as little as the 30 minutes. Sometimes I stop at 1 hour to pick an entry though, or sometimes even 4 hours, if that is a comfortable time frame for you to pick an entry. Okay, so the first thing we do is we'll go on to the monthly time frame and see the overall structure of prices. Okay, what structure is prices currently trading at? Okay, and that is going to set the tone for the buyers that I'm going to pick on the 1 hour, 30 minutes, or even 4 hours. Okay, so what's the overall structure? We can see prices making clear push exhaustions, push, exhaustions, and push. Okay, so just like I told you earlier, this is a clear lower high, This is another clear lower high, and this is an high. While this is a clear lower low, this is a clear lower low, and this is a low. Okay, so just like I told you in chart structures, something is sure that what price is on clear lower highs and lower lows. Okay, so this means that what, when we take this knowledge to as little as the 1 hour, the 30 minutes to look for an entry, we know that what, if we are selling, we're in the direction of trend, because price is on clear lower highs and lower lows. That is, overall price is on a bearish structure. And if we are buying, it's the retracement. Okay, this takes us to the real-time trading opportunity on the monthly time frame. Okay, now let's identify everything again, just for clarity. Push, exhaustion, push. Now, if we are seeing a buy trade opportunity, that is what we saw. We see a break of structure between the low to the high. The maximum we can buy to is the 61.8 of the low to the high. Let's bring out our Fibonacci out. This is the peak, and this is the trough. Okay, we can see that price has gone to 61.8 and is making some retracements there, not retracements, some reactions there. Okay, so clearly we know that what, any buy opportunity here, the max is we buy to 61.8, and at 61.8 we look for a break of structure between the low to the high. As soon as we see a break of structure, we're going to sell down here to the ground. Okay, so this is very important, because what, buying against the trend, it's a retracement. And like I said, the max 61.8. Why will price get 61.8? We'll look for the structure that took price to 61.8. At the break of that structure, we'll sell down to 100.0 here, you know, where the whole bullish move started. Okay, because that is the direction of the trend. Okay, so now let's go to the weekly and let's identify the same structure. Okay, so the same structure, we can see prices what, make push and exhaustion of a bigger fractal now. Then on the smaller fractals, we can see prices making push, exhaustion, push, and price has broken the structure on a smaller fractal. Now, since price has broken the structure on a smaller fractal, it lets me know that our direction of trend. Remember that what I told you, that what the monthly, weekly, daily, it shows me the overall direction, and it helps my buyers on the smaller time frames. It lets me know if I'm in the direction or not. Okay, so now the monthly has let us know that what, okay, a strong area of reversal has been identified, which is the 61.8 around all of these zones. That has been identified. Now, when price hit that strong area of reversal, what did prices do? Prices came and prices broke a bullish structure. Okay, for the bullish structure that prices broke this smaller fractal, letting us know that what, price is coming to 100.0 here, where it all started at this point. This is the low. Okay, let's just identify it properly. This is the lowest point here. Price is coming here because what, this particular structure was broken. Push, exhaustion, push, break of structure. When price breaks a structure in direction of trend, price is coming to the 100.0. Now at the 100.0, if prices now decide to break the full structure, now it will now be a situation of push, exhaustion, push. Then this is the last higher low. If prices now comes and breaks the structure now, then price has broken all of this structure and price is coming to this 100.0 here, because all of the structure has been broken when prices breaks this one. But right now, our real-time trade opportunity is between this low right here and the high. And this was the structure that was broken. Push, exhaustion, push, and prices broke the structure right here. Now prices broke the structure right here. You can decide to sell, put your stop loss at the high, and sell to this support level here. Okay, but that would not be a good risk reward. Okay, so how would we trade this pair? We'll trade this pair knowing fully well that what, okay, when a break of structure happens, we normally see a 61.8 retest. Okay, so now what particular 61.8 am I talking about? It's going to be what? The Fibonacci from the high to the low. Now you can see prices clearly trading at around 61.8. That is what, okay, we saw prices made the push, break structure. This is our TP here at 100.0. This is the TP. Now we couldn't get a good risk reward. So what would we have done? We could have waited for prices to come to 61.8, and at 61.8, this is a good sell that is live now. You can see prices have started even moving in the sell side. This is a good sell that is live to sell here, take profit at 100.0 here with our stop loss here. Or we can take profit using the other method I talked about, which is what looking at the structure that took prices up and sell at the break of the structure with our stop loss at the high of that structure, which is going to give us what, a better risk reward. Okay, but now let's look at the risk reward of this particular trade now. Let me put the horizontal line on this pinpoint 61.8 now, since we already know where we are selling to. Okay, so now let's bring our crosshair tool. Right now, if we are selling now, we'll put our stop loss at the high. This would be about 544 pips, and we are going to be selling for about 802 pips. This would just be a 1 point plus risk reward if you are entering right now. But a smarter way to enter this trade, just like I told you guys, is to enter by what? Identifying the fractal that took prices up. Now, that fractal that took prices up, and what you look for, what? A break of the structure. If we see a break of structure, we can be able to sell and put our stop loss, just a very small stop loss above, and what? Sell for all of these massive gains to this point. Okay, since a clear break of structure has happened here, this is where price is coming. My job right now will just be to go on to smaller time frames and look for what? A break of this structure. At a break of this structure, sell and ride through, and which is going to be a more smarter way to trade, and we're going to give a smarter risk reward. So our job right now is to go and find a break of structure at the 61.8 zone. As soon as I see a break of structure, remember, all of these are just to retest, and as soon as we see a break of structure, we are going to be shorting prices down. Okay, so let's go on to the 4-hour time frame to see the structures of prices better. Okay, so on the 4-hour time frame, we can see prices make different fractals. Okay, we can see prices make a push exhaustion here. This is a bigger fractal, and this is a smaller fractal. Push exhaustion, this is a smaller fractal. If you bring your crosshair tool, just like I told you, you will know that what they are of different fractals. Okay, let's measure the exhaustions together from the peak to the trough. The first one is what? 266 pips. The second one is 236 pips. Clearly, they are not of the same fractals, and it's also not of the same fractals with the next one, which is about 128 pips. So anytime you're confused about structures being of the same fractals or not, bring your crosshair tool and measure their retracements. Okay, so let's go ahead and continue highlighting the structures. Okay, so this is push exhaustion. This is a different fractal. This push exhaustion, this is also a different fractal. So the structure that was broken was push, prices made an exhaustion, then prices made a push to this level, prices made an exhaustion here, prices went back to 61 points for a double pressure, and prices broke the structure. Now this is a fresh sell. Remember that what we did was what? Firstly, identify a potential area of reversal, which is the 61.8 here. Okay, remember that all of these push movements, all of the push movements, the highs and higher lows, were only a retracement to 61.8, and at 61.8, a strong potential area of reversal, prices broke a structure. Okay, so if we were looking at this time frame alone, this would be our TP, because for the fractal that we entered, this is the TP of the fractal that we entered in. But because we are looking at it from a bigger perspective, we know that prices is not only just going to come here, it's going to come here, but it's going to break into this new fractal and keep breaking down to our overall TP at the weekly time frame right here. Because at the end of the day, all of this were just push, exhaustion, push, break of structure, retest to 61.8. We got a good entry on the smaller fractal, and price is coming to 100.0 here. Now at 100.0, if prices breaks this structure and there's a close below this structure at 100.0, remember, we are going to check it through the line charts. If there's a break below that structure at 100.0, it lets us know that what prices would have broken a new structure of this push, exhaustion, push. All of this will now be pushed. So if prices break this new structure, you know that this is a take profit. Okay, so now our real-time trading opportunity is the sell from there to this area right now. Okay, so let's go ahead and measure how many pips take profit is going to be. You know, from here to the TP is going to be about 747 pips, and for our stop loss is going to be from here to the top at about 159 pips. This is definitely going to be a 1:5 risk reward. And if you entered pinpoint at the break of structure, you'll probably get, you know, maybe a little better risk reward. Let's see, you know, this is the sell, about 137 pips for about 747 pips take profit. So they are all averagely a 1:5 risk reward trade. Okay, so this is a fresh trade. and we know clearly without any doubt that what prices is going to extend from there. We've seen a break of structure on a small fractals, knowing that all of this were just a retracement and prices coming here for our TP. So by the time prices TPs at that place, remember this is it, push, exhaustion, all of this will now be push. By the time prices TPs at this place, if it breaks, if one daily candlesticks breaks, then price has broken this new structure here, and this would mean that what price is coming to the ground level. Now this ground level now will be hundreds of pips. So this is how I'm able to visualize the market and see hundreds of pips into the future. This is going to be 2190 pips, and it's going to be a very beautiful trade by the time prices breaks this particular support level. But right now our trade opportunity from here is going to be 700 pips, and if prices breaks this structure and breaks into this new trade opportunity, we are definitely going to be seeing trades giving us over 2000 pips. So it just depends if you want to hold that long or if you want to exit at our first trade opportunity at this level, or hold and see if prices will break the support and take profit at this level. So this is how we're able to use the knowledge of chart structures to be able to take massive pips and massive trades in the market, and this is how we're able to analyze using that knowledge and become highly profitable. So don't forget, guys, I have my bootcamp coming up. My bootcamp, I'm going to be explaining more of every single thing I just talked about, and you are definitely going to see a big transformation in your trading. So link in the description to subscribe for my bootcamp, and see you all during my bootcamp.